We do have N.F.P coming out in the next few seconds, in the less than 30 seconds to go. Now I want to trade the release after. I want to focus on the numbers, how it's going to come out, and then look at opportunities on price action later onwards. In the next 10 seconds, we are going to receive the data. I don't want to execute a position prior to this. Okay, so the numbers are out. Yeah, as in, let's see. So a buy limit below this region will be interesting. Below 32.27. Okay, I think that's what I'm going to go with. 0.1. A buy limit below this region. If prices do come and tap into 33.27 region, 33.27, 33.28. Okay, so the numbers have actually come out better than anticipated, whereby we were looking at a forecast of 111,000 jobs being created. Actually, the number has come out greater at 147,000 jobs being added to the job market in the United States of America. The unemployment rate has actually come down from 4.2% last release to 4.1%. Unemployment claims has actually come much better, whereby lesser people are filing for unemployment insurance for the first time in the past week. Looking at the data, it is positive for the dollar, and we have seen the release whereby the charts have digested this data as positive for the dollar. I am buying because if you look at price action on a larger scale, on a longer time frame, gold is bullish. And whenever we have news releases, especially high impact news releases like this, it usually grabs liquidity because the market is efficient in how it delivers itself. The market usually engineers liquidity, and for the markets to move to the direction that it wants to go to, it has to dump a lot of people, because if institutions are buying, they need to look for an equal amount of sellers. Now, this is something that is very in depth when you're looking at, because it's all about understanding how institutions, the big players, move money. How does news trading work? How does everything work? And when you're looking at such an opportunity in the financial marketplace, yes, the data has come out positive, but could this just be an opportunity, prices retracing back to the downside for a further push to the upper side? The execution is about to be triggered. So when you're looking at a strategy like the one I'm currently executing at the moment, you don't know how far prices will go against you, then it starts retracing. So with news, once again, it's a 50-50% chance. But if you swing it right, if you do swing it right, out of the 50% that go in your favor, it will really go in your favor. There's a probability that there is also the 50 that will go against you, and when it does, it will go against you real bad. It's all about probabilities. It's all about having faith in your strategy. It's all about you as a trader. I'll be targeting prices to continue moving to the upper side on gold. You can have as many strategies as you want, but the most important thing when you're trading such an execution is the risk management. Let's say, for example, you execute a 0.1 lot size on gold. So basically, that's for every pip price moves, you either make or lose $1. So if you have like $500, just be rest assured your account cannot hold as much as 500 pips. It's going to be actually much less than 500 pips. Once again, I talk about this frequently. The position has just been triggered. It reaches a point whereby you need to have faith. You need to have faith because you can do everything right, but it reaches a point whereby you have to accept. You have to accept that you cannot control the markets. You have to accept that you can control as much as you can, but you cannot control what the market does next. There are things you can't control: risk management, entry, stops, but you cannot control how the next candlestick is going to print. Very interesting. Let's see how prices are going to behave afterwards. So this will be the final screen recording, I do believe, of this trade journal, whereby whatever happened. It's Friday. So if I close this position even right now, it's still